What's up, good people? I'm here with a very, very important update. As you know, I am all things tax and wealth building through the United States Tax Code. I'm a former revenue agent in a large business and international division of the IRS. I'm an enrolled agent. I have 20 years total in audit, accounting, and tax, business owner, real estate investor. So as you know, the current Tax Cuts and Jobs Act is starting to phase out for certain things like bonus depreciation. For those of you who don't know, bonus depreciation is a godsend for business owners, small and large alike, and real estate investors, small and large alike. And it has a very huge impact on our ability to build wealth, particularly if you are coming from your average 9-to-5 W-2 background, right? So for those of you who don't know, bonus depreciation for real estate investors and business owners simply allows a huge first year expense on the cost allocated to certain properties. Now, I said cost allocated, not spent. Okay, so I'll give an example with real estate. With real estate, you purchase your property and you purchase it for investment purposes only, right? Because this does not apply to my primary residence people. What bonus depreciation does is say, hey, along with the regular depreciation, right, which for most people, 4 units and under is 27.5 years, we're going to give you an additional expense for items inside of the property and around the property that are normally not expensable, like your appliances, your removable flooring, your kitchen cabinets, countertops, all those good things, carpeting, everything that is not part of the structure that's depreciable under 20 years. Things like your driveway, your walks, your fencing, all of that good stuff. And what it does is it creates this huge phantom expense. It's phantom because we don't really pay for it. We've only purchased the property and placed it into service, meaning we have it ready and available for rent. What does this do? It creates a huge phantom expense. And that expense, if utilized as a real estate professional in the Internal Revenue Code, can offset all other income. So theoretically, you can offset maybe up to $1 million or so for the average person who owns a smaller portfolio of income, right? If you're a real estate professional and you have other income. The same thing goes for business owners. Business owners can take 100% bonus depreciation for machinery, tools, and equipment up to December 31st, 2022, right? So under the Tax Cuts and Jobs Act, bonus depreciation starts to phase out for these costs allocated to qualified property, okay? So from 2017, September 27th, to the end of December 31st, 2022, we got 100% bonus depreciation. It started to phase out in 2023 to 80%, and this year 60%. Well, there's a new bipartisan bill on the table to extend 100% bonus depreciation retroactively to 2023, all the way through the end or the expiration of the Tax Cuts and Jobs Act, okay, which is 2027. And then to extend it out to 20% more 2 years after that, okay? And by 20% more, I mean 20% after the 100% phases out. And this is a huge deal because for those of you who are purchasing property for investment purposes and placing it into service 2023, 24, 25, 26, you will get 100% instead of the normal or original phase out rules of 60, 40, 20, and then 0 in 2027. So this is a big deal. This is a huge deal. And if you want to learn more, I show you exactly with some real numbers with my own properties, how I was able to save over $500,000 in tax liability using bonus depreciation, which is a first year deduction. In which, you know, business owners like yourself and myself and real estate investors like yourself and myself can use it to build wealth by sheltering taxes legally. So go ahead and click the link in the description box or the bio and register because this is a big deal. This is a game changer. And hopefully when the Tax Cuts and Jobs Act end, we can revisit this and hopefully 100% bonus depreciation will be extended past 2027.